the economy is cyclic. So and we're somewhat overdue for a recession. And my best guess is that, we have sort of stormy times for a year to a year and a half, and then things start to, dawn breaks roughly in Q2 24, if I were to get. That's like my best guess.
In today's episode, we have Elon Musk talking about his expectations for 2023. He is certain we are going into a recession. His revelations are as shocking as they are insightful. What does the world's richest man know about 2023 that you should know? Watch this video to find out. Remember to click the subscribe button. It only takes a second and is always appreciated. Let's go over to Elon Musk.
One of the things we just talked about was the regime change that's happened where, we all have to act differently now that the risk-free rate is probably going to get to 5%. And I'm just curious, across all your businesses, so Twitter, yes, but really more importantly, Tesla, SpaceX, are there decisions that you will make differently or not at all, or will make that you wouldn't have made otherwise in this new regime? And how often do you think about that kind of stuff?
Well, I think it's more like it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Watch out for margin debt. I would really advise people to not have margin debt in a volatile stock market. From a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was a CFO, who is a CFO of SpaceX, was at Broadcom in 2000, and he said that, and that's a good company making good products. And he said from peak to trough, I think in less than 12 months, Broadcom went down 97%. So even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think to much higher levels. But if there's mass panic in the stock market, then you got to really be careful about margin debt. But I mean, this is just as we know, the economy is cyclic. So, and we're somewhat overdue for a recession. And my best guess is that we have sort of stormy times for a year to a year and a half, and then things start to, dawn breaks roughly in Q2 24, if I were to get. That's my best guess. Recessions don't, booms don't last forever, but neither do recessions.
2022 has been an awkward one for investors. The leading argument was if the economy was in a recession or not, leading to a point where we almost redefined what it meant to be in an economic recession. Experts such as Cathie Wood of ARK Investment said we were already in a recession, which she defined as an inventory-led recession. The National Bureau of Economic Research, or NBER, is the body responsible for declaring a recession, and they clarified that the 2022 economy did not meet the metrics. Elon Musk is certain we are slipping into a recession in 2023, and it will last until mid-2024. He is not alone. Many experts also give this grim forecast. U.S. Treasury Secretary Janet Yellen revealed in an interview with CNBC that there's a risk of a recession, saying it was needed to bring the problem of high inflation under control. On this channel, we have featured interviews with financial and investments experts such as Gareth Soloway, Jim Rickards, Peter Schiff, and more. They all agree that the worst is yet to come. David Solomon, CEO of Goldman Sachs, is also certain we will have a recession in 2023. So what's Elon's advice? If you've been following the markets, you'd know it's been a bloodbath in the stock markets. Elon thinks margin debts in stocks should be avoided by all means. What is he talking about? Investors can borrow money from their brokerage through the margin account. This is very helpful for investors that want to quickly seize a tantalizing investment opportunity but are low on liquidity. This credit can be used to purchase securities and can be as high as 50% of the total you have in your account with your brokerage. Now here's the risk. Your brokerage has the right to sell all your securities when they are not performing in the market. It is extremely risky, and even more risky in an unpredictable market like we have now. This is because you do not have the right to hold the securities until they perform. You can get a margin call at a time when the stocks are much lower than you are willing to sell and lose the money you had as collateral. Along with Elon is Chamath Palihapitiya. He agrees we must prepare for a recession and talks about preparing for it if you are a business owner.
I actually want to double down on David's answer, Sachs's answer, because I agree with that. I have been guiding our portfolio company CEOs to be at cash flow break even now or extend runway to Q1 2025. And there
25.
Yes, because I think Elon
Not 24.
Elon and I are kind of roughly in the same place. We have been for a while, which is like, mid 24 is when the recession ends, and you need to give yourself 2 to 3 quarters of buffer so that you can go and raise around, which takes a quarter to 2 quarters. And once you start to get escape velocity out of a recession, having money through end of Q1 2025, I think is a minimum requirement. And, of the companies that I think were the most precariously positioned, there was 5 of them that got their acts together and really did it. But these are all CEOs of companies that, if you said them, you would know some of them. But I do agree with David. I think the CEO that bit the bullet. So maybe publicly what I would say is, the CEO of Klarna deserves a huge, medal for having the courage to do it before anybody else did. The CEO of Checkout.com just took a huge write down. These CEOs are making sure their companies survive.
According to Chamath, businesses that will survive are those that are ready for the long haul, those that can weather the storm until Q1 of 2025. Is this timeline outrageous? If we are to take lessons from the 2008 recession, then Chamath's prediction should be taken seriously. The Great Recession started in December of 2007 and ended in June of 2009. The S&P 500 fell by 57%, GDP declined 4.3%, and unemployment went up from 5% to 9.5% by the end of the recession. Right now, unemployment is still below 4%, making it one of the few metrics that has been positive. Unfortunately, unemployment is likely to skyrocket in 2023 as we saw massive layoffs in Q4 of 2022, especially from big tech companies.
I'll put myself in the category along with anybody else who was long tech. Nick, if you can just please back up this capital asset pricing model. Any of us that didn't understand this got run over this year. And just to put some very specific numbers here, there was a decent little tweet thread that Elon was a part of where they actually calculated what the expected rate of return of Tesla was, and it turned out to be almost 14% a year. And so, when you start to compound 14% over 3, 4, 5 years, these numbers get very big very quickly. And the reason why is that it has a huge beta, and we're in a world now where the risk-free rate is quite high. So all of us benefited from this equation essentially being upside down for the last 15 years. And all of us who were over-allocated into things that benefited from those dynamics, frankly, got run over this year. So we were, as a class, the worst investors of 2022.
According to Investopedia, the expected return is a tool used to determine whether an investment has a positive or negative average net outcome. The sum is calculated as the expected value, or EV, of an investment, given its potential returns in different scenarios, as shown by the formula Chamath Palihapitiya is referring to. This formula indicates that the volatility of a particular investment in relation to other assets or investments would determine the expected return on that investment. The baseline is a risk-free investment, but this is theoretical. So, for the formula to work, it has to be based on the performance of your investment only relative to other investments. Tech companies have not done so well in 2022, and they may remain a risk in 2023 if we indeed slide into a recession. If you like the video, don't forget to click like, subscribe, and share. Adios, and thanks for watching.